There's a common myth out there that you need 20% down to purchase a home. And I know everyone talks about this to the point where it's almost not a myth anymore, but you'd be surprised at the number of people that reach out saying, I need 20%, or I'm not quite to 20%, or hey, I'm still a couple of years out from 20% down. Um, there's definitely benefits to a 20% down payment, don't get me wrong, but you absolutely do not need that much money for a down payment on a home. I have clients all the time utilizing 5%, 3.5%. I even have clients that are doing 0% down on USDA loans or $1,000 down with down payment assistance. So you do not need 20% down payment to get a home. One of the things that I always find interesting is that everyone's definition of perfect credit is different. There is no such thing as a perfect credit score. There's really good credit, there's above average credit, there's average credit, and then there's credit that's below the mean or below the average. I will tell you that most people that I interact with on a day-to-day basis are not at that perfect or above average credit tier, and that's totally okay. There's programs that are out there that might be a better fit for you, and there might be some programs that aren't a great fit because of that, but we can tailor any mortgage program to your credit score depending on where you're at. I don't know anyone these days that doesn't have a lot of student loan debt, to be clear with you. So education is important, but it's expensive. And what I'll tell you about student loan debt is that we as an industry have made some really positive changes. I think there's some additional ways we can improve on that, but we have made some really positive changes on student loan and how student loans and how we factor that in. So for example, student loan debt, if you went to school to be a nurse, those student loans can be pretty big. They can be pretty daunting, especially if you're not making monthly payments on them or if you're on a deferred program. We typically just hold a certain percentage of the total loan against you to qualify, and different programs have different levels that we have to hold against you. So you just got to get in touch with an LO to see what that looks like. We can also creatively get you into payment plans with your student loans to lower the amount of obligation that we have to count against you in a mortgage. So this is one that I think is a little bit hard to answer because of course we want to find the lowest, most competitive interest rate that we can find for you. There's no downside to finding a lower or lowest, if that even exists, interest rate. But there's so many things that go into a mortgage interest rate: the costs associated, the cost to procure, the ability to get you to the closing table on time, the reliability and the communication of that loan officer. So those are all ancillary things that make up a really good mortgage experience. We obviously want to get a low rate and we want to find a really comfortable rate for you, but there are going to be different programs that hold a lower interest rate but a higher overall monthly payment, whether it be mortgage insurance, whether it be a guarantee fee. So there's a lot of different things that factor into that. The bottom line is, of course, we want to do whatever we can to find the most competitive rate for you, but I will say there are a lot of things that go into that rate, and there's a lot of things that go into your mortgage process that are equally important, if not more important, than the actual base rate. This one I do hear all the time from clients, and it's one of the ones that I kind of want to just reach through the phone and do a little bit of a shape to reality, because I think we forget what the market was like before the interest rates kind of went up. And we're seeing that even right now with elevated interest rates, because the supply is so low and the demand is so incredibly high. We're seeing a ton of competition for homes, and there's no end in sight for that, unfortunately. I think we're going to see some inventory improvements, but I think competition is going to remain high for a while. If you factor in lower interest rates into that, the price of the homes tend to skyrocket. They tend to go up very quickly because A, there's more competition, there's more people able to buy a home, so you're competing against more offers, and B, people are more willing to jump into the market, so you're competing with a higher volume of qualified buyers in that range. One thing you cannot change about a mortgage, and I don't love the term marry the house, date the rate. I'll be honest with you, it's not my favorite line, but there's some truth to it. I cannot, as a loan officer, manipulate or change the acquisition of the home, but I can help you down the road manipulate or change the interest rate when those rates come down. I think people that are waiting for a lower interest rate are going to find they're buying the home at a much higher price than what they would have been able to buy it for if they weren't competing with that many more buyers. So the concept of waiting for rates to come down, I think there's plenty of data behind the idea that that does not procure less money out of pocket or a lower cost of transaction or a lower cost of procurement. So I disagree with that one completely. There are different types of credit inquiries. There's a hard inquiry, there's a soft inquiry, and then there's just a conversation. And a lot of our conversations with clients are just that. They're a conversation. What are your hopes? What are your dreams? What do you want this process to look like? How do you want it to feel? Where do you want to be in 1 to 2 to 3 to 5 to 10 years? If we find that it makes sense for us to move on to that next step, we'll talk about what the credit checks look like. You can have multiple hard lender real estate related inquiries within a set period of time, and it doesn't ding you multiple times. A credit check from a loan officer or a lending institution is going to have an effect on your credit, but it should be pretty minimal. And again, you can check with multiple different lenders at the same time or within that set period of time. So it's not going to ding you that much. The other thing that you have, or the other option that some institutions offer, is a soft credit check. It's not going to be as comprehensive, and it's certainly not going to be as robust, but it gives us an idea of what you can qualify for and what the general interest rate and terms would be for you if you were to want to get into a mortgage. So the best thing I can say there is, if you're seriously considering buying a house and it's within a year, you should be doing a full and complete loan application if you feel comfortable and ready. But know that there's options, and there's options that even involve no credit check. You just might not get as much detailed information out of that conversation as you would want. So guys, if you are even considering looking at buying a home, if you're having the idea mulling around in your head, or if you're just kind of sick of renting or living with family, whatever that may be, I think it's probably a good idea for you to be reaching out to us on the lending side or to a real estate professional. But I would say that a conversation is the first step. And so many people are scared to take that first step, but it's truly something we do day in, day out. And they can be detailed or they can be casual. And I would just say, if you have questions or if there's anything that's just in your mind and you want to run ideas by somebody, give us a call. We're always available here to talk about that and to go through some of those ideas with you.